Corporate tax avoidance is never far from the headlines. This week, the US Treasury appears to have cracked down on one of the more egregious forms of this. Alan, what exactly has happened?
The US Treasury has announced that it will effectively no longer allow inversion deals. And this was a sort of tax dodge that allowed an acquisition of a US entity by a foreign entity, a smaller foreign entity, but allowed that bigger US entity to move its tax residence.
Right, to a place with much lower than what the US has got a tax rate of, what, 35%?
In a statutory basis, yes.
And in particular in the headlines today, I understand the big share price mover as a response to this regulation is Allergan, which was due to be buying Pfizer in $160 billion, of course. Yeah. So what's been the reaction?
Well, the shares were down after the announcement, which came in after the market closed yesterday, on Monday. Then the shares after market went down as much as 19–20%.
Wow.
So far, they're down about 16% in active trading now.
And what about Pfizer?
Pfizer went up a little bit. Probably merger arbitrageurs would have been short of Pfizer and long of Allergan.
Okay, so now, call this a tax dodge. Is that really quite fair? I mean, after all, different countries have different tax rates. I mean, Ireland's is what, 12%, the US is 35%. Any sensible finance director is going to spend his time trying to find the best rate. What exactly was so bad that this could be referred to, I believe in your piece, as sort of vampires, people who let the blood out of the corporate
I think the concern
body
is that deals were being done primarily to move a tax residence away from the United States.
Okay.
And in doing so, reduce the tax burden for the U.S. company, and therefore reduce the tax revenues to the U.S. Government and therefore the taxpayers.
So it's terrible for the US. Presumably it's great news for the country that ends up as the recipient of some giant US multinational that they didn't expect.
Perhaps,
so this is going to end a few deals. I mean, have these deals been particularly prevalent recently? I mean, what's been the history here?
Well, first of all, let's look at the share price of Allergan, which at one point used to be Actavis, has done pretty well. The company, as Actavis, had been in a buying mode. Some of those inversion deals helped them get their tax treatment down, their tax rate down. Buying Allergan, and they changed the name, was a very, very large deal in itself. It's about $70 billion. This would have been the next step for Pfizer. Now it would have been, really, Pfizer would have been buying Allergan. And Allergan's tax residence would have taken precedence here. That would have brought down Pfizer's tax costs significantly.
This is very hard to defend. It's quite hard to imagine a circumstance in which somebody says, what we need is a system in which people do huge takeovers with huge fees, presumably, to make the thing happen, in order simply to make one government slightly richer and another government slightly poorer. Is there any defense for it at all?
Well, first of all, I think that a company wanting to get its costs down and its tax costs, expenditure down, is not a bad thing per se. There's no one's objecting to that. But if the primary reason to do an acquisition is for a tax inversion, we would beg to differ, and we have in our report today.
So, if I may summarize, it's okay to have mergers and acquisitions that are justified by operational synergies, sales and so forth. If the only reason is tax, forget it.
You got it.
Thank you, Alan.